So before we start with the webinar, may I provide with you some information of our speaker. So we have Prasen Chakraborty. He is a mergers and acquisition practitioner and head Mazars Financial Advisory Services team in Thailand. Prasen has over 13 years of experiences in the UK, Middle East, and Southeast Asia. So we have him today, and he is here with us. And may I hand over the microphone to you, Prasen? The floor is yours now.
Thank you, Kunfresh. That's a good introductions. Appreciate it. Good afternoon, everybody. Thank you very much for joining today's session. Today we're going to talk about COVID-19 impact on cash flow and business valuation. I think this is the most discussed topic at this point of time when all the businesses are going through this pandemic. And what are the key areas or point all the business needs to look at while considering the further development for each business, because as all we understand that cash flow is a backbone of a business, and we need to have a solid backbone for our business. And once we have a solid backbone, then only we can expect to have a positive valuations or growth in our valuations of the business. Kunfresh has already introduced to me. Yes, I am based in Bangkok, leading the financial advisory service for Mazars, primarily focusing on corporate finance services, helping clients in M&A and fundraising activities. Also, I'm leading the deal advisory services where I advise my client with business valuation services, due diligence services as a buy-side advisor. So in order to understand the impact of COVID-19 on cash flow, business cash flow and business valuation, what we have done recently is a survey reaching out to all the global investors who are our clients, and those investors are basically private equity and venture capital fund investors, to understand that how their portfolio companies are managing the businesses and cash flow during this pandemic situation. So if you look at this slide and the left side, the pie chart, this is the profile of the respondents that we reach out for the survey. And the pie chart says that 38% respondents were from venture capital fund investors, and 36% are growth capital fund. Obviously, there are other funds who are operating as a distress fund or leverage buyout or venture capital debt funding. All these funds, they have their own portfolio companies from various sectors, from manufacturing, airlines, education, healthcare, hospitality sectors. And we try to understand through the survey that how their portfolio companies are doing and what is their plan of actions going forward, or particularly after the situations, the pandemic over. Based upon the responses that we have received from these investors, they said that around 89% of their companies has a decline in revenue up to 50%. So these red bars is actually says that the 89% portfolio companies has a revenue decline during this pandemic in last 6 months. And when we try to understand, and that's a significant amount, significant drop in the revenue. Revenue is actually the cash inflow, so that actually increase the pressure on the cash inflow for all the businesses. When you try to understand that what would be the next plan of actions for all these investors with their portfolio companies, how they want to mitigate this pressure on the cash flow, the responses that we receive is 24% respondent says that they will be focusing on managing the risk for next 12 months. So that means they are not looking to invest further or do experiment with new investment or diversifying their business. At the same time, 45% respondent, if you look at this bar and the next one, 45% respondent said that they will be focusing on looking at opportunities, new business opportunities and acquisition. The primary reason for this is they believe that this is a time when they can find a good business opportunity with probably a lower valuation, which will help them to scale up their business and scale up the revenues, top line numbers. And surprisingly, we noted that 24% respondents said that there will be no change in their business. So they just want to run their business as is basis. They don't want to experiment with alternate business options and all. So this is a pretty good survey that we have done, and the responses that we have found from all the investors. Now, in order to understand that what are the key impact on the cash flows, we have noted that the major impact that had on the business cash flow is on the generations of the cash flow. In our opinion, the important questions that arise that during this pandemic, when there is a pressure on the cash inflow, which is the revenue, the important question which arise that how long the companies or businesses endure the current situation. How long their business can survive this cash inflow pressure. I mean, the revenue has declined up to 50%. So how long the businesses can really sustain, whether the cash flow they have, that's a sustainable cash flows or not for the business. So that's a very important question, and every business needs to assess that cash flow very, very carefully. The next thing is, when this pandemic is over, what conditions your business will be. Now your business is having cash inflow pressure, but when this pandemic is over, there will be new opportunities, there will be new demand. Now you are using up your cash reserves that you have to meet your daily expenses or current liabilities. So you are basically using up your all reserves. So what will happen when this pandemic is over? How you can really tap the new opportunity to expand the businesses. So overall, in our opinion, we really believe that the fundamental variable that will determine the ability to generate cash flow going forward is the time. So time is very crucial. That's a very fundamental point. We all know about this, that time is equivalent to a money and value of your business. I give you a very small example of our recent one of our client. The client is a tech-based logistic company based in Thailand, and they are providing services to all passengers arriving in Thailand, delivering their luggages from airport to their hotels or their other destination. As the hospitality industry and aviation sector suffered due to this pandemic, and all the passengers' arrivals stop in Thailand, this client really out of their core business because there is no customer for them. So they had no cash reserve to, after 3 months, there is no cash reserve to pay the current liabilities, pay the salaries or, the suppliers. So they're totally out of the business. The reason that they have, the situations they're in is simply because of there's a lack of backward integrations for the business. So they really couldn't secure the generations of the cash flow. And that was a great learning for us and even for the client. Then the second key point, which was impacted by this COVID-19 is the variable growth of the business. As we all know that, in our business, we always expected to have a higher growth, higher future growth, because the higher the growth is, the higher the value of your business. But during this pandemic, we learned that it's very uncertain. There are new uncertainties, there are new risks came in. So we cannot really know what would be the future at this point of time. So it is very much important for us to to determine what would be the growth of the business in going forward when this pandemic is over, as much as we can. It is quite difficult to project the growth, the variable growth of the business going forward, but we need to do a proper assessment of the business, the product, the services that we are delivering, what would be the demand post this crisis. I share one example that is mentioned on the slide. In last 20 years, retail growth in China was only 8%. But during this COVID-19, the retail growth declined by 20% within 4 months of time. But at the same time, when there was a news that when the retail industry opened in China and the retail store opened, they started having like 2-3 million sales in the first day of the opening. So there are a lot of new concepts coming up that the market will take a new shape, V shape or U shape. But we need to be very realistic, and we need to assess our business and the opportunity available in the market, and accordingly we need to assess what would be our going forward cash inflow, how we can sustain our cash inflow and cash outflow as well. The third point is a new variable risk. Obviously this pandemic situation taught us that there will be a new risk in the business going forward. There's always a discussion point whether there will be a second wave of this COVID-19 or not, or there will be some other new pandemic. So the business is always surrounded with a risk, and there will be a new risk as well. So we need to assess those risks very properly when we really focused our cash inflow or cash outflow going forward. Uncertainties, volatility is always expected in cash flow generations, and we always need to be careful, keeping one point in mind that the higher the risk is, the higher the risk you consider in your cash flows, that lower the value of your business. Sometimes yes, sometimes also no. So we need to assess the situation. We need to assess which sector you are operating, because different sectors, different country has a different impact on the valuation. Now, when there is an impact on the cash inflow, and what would be the priority going forward for all the businesses? When you are in a business, there is a cash outflow as well. And the primary points that we need to keep in our mind, that the statutory payment, which includes the payrolls and benefits that you need to pay to your employees who are working for you, the corporate taxes, though some countries they provide, the government provides some incentives by extending the tax payment deadline, but at the end of the day you need to pay the taxes whatever the situation you are in, and payments to the suppliers or the creditors. So these are the three key or statutory payment every business has to be careful of, and needs to have a sufficient cash reserve going forward, at least to sustain for 6 months to 1 year during such crises which may occur in future again. The second thing is unforeseen risk management. As we learned during this pandemic situation, that when this type of crisis appears, the business needs to restructure. The business may need a restructure from an operational point of view, from a financial point of view. When you need to do a restructuring of your business, you also need some cash in hand to perform the restructuring, or you may need to look for some alternative business opportunity or investment plan which can give you an additional revenue line. In order to implement those plans, you need a sufficient cash reserves, and it would be advised from Mazars that all the businesses, particularly the SMEs, they should have that sufficient cash reserve, so during the crisis they can do the required restructuring for the benefit of the business, or assess the alternative investment plan to have a additional cash inflow or revenue stream in the business. The third important point is positioning for the future. I already mentioned that when this pandemic situation is over, how you really how your business is really going to be positioned in the market. There will be a lot of opportunities in the market when it's actually proven when we come out from a crisis. There will be a new service requirement, there will be new product requirement, there will be probably new industry or new sectors comes up. uh, you know like healthcare sector, this COVID-19 gives a new horizon to the healthcare sector to think scientists to come up with the different product, different medicine. So in order to diversify, in order to position your business very well, you need to also have a sufficient cash reserve in the business with you, and that reserve should be at least for 6 months to 12 months period, so you can survive, you can position your business well in the market competitively. Now, when we are talking about the priorities for cash outflow, you need to have a sufficient cash reserve with you. We are talking about impact on the cash inflow by this COVID-19, how this is going to impact your business valuation. As we know that business valuation is very important for all of us. We need to know what is the value of our business. It is always advisable to have a revise to have a fresh valuations of your business periodically, and that valuation may need it for different purposes. You may be looking for a new fund through equity or through debt, so you need to understand what is the current business valuations. You may be looking for a new M&A or new acquisitions of businesses, so you need to know your business value at that point of time. Or just because you need to know the value of your business for the financial reporting purpose within the stakeholders, or to your statutory auditors and all. So it is very important that we always determine the value of our business when we come out or when you sustain during this crisis situation, and what is the impact we had on the valuation. Because when we talk about the cash flow is impacted, obviously your business valuation is also impacted. So now when you perform your business valuations, what are the key points that you need to be careful or you need to carefully assess? The first point is date of valuation. Date of valuation is a date at which you calculate the present value of your future cash flow. As a businessman, we always try to project our cash flow, that we are going to generate from the business for next 5 years or 10 years. We always try to be optimistic. We try to, because we include all the business options, new opportunities in the cash flow. So when you perform your business valuation, you try to calculate the present value of your future cash flow. And why I am saying it is very important, the date of valuation is very important, because, for example, if you are performing business valuation as of 31st December 2019, maybe the projections, the cash flow projections that you have prepared before 31st December 2019, that may not included the impact of the COVID-19. That may have you may have a regular cash flow for 2020, but due to this COVID-19, the situations totally change. But when you are doing a valuation as of 30th June 2020, maybe your cash flow projections has considered the impact from the COVID-19 on your actual performance, and you may have also updated and modified your future cash flow for the remaining, the period of 2020 and even for 2021 and going forward. So that's why I always say that date of valuation is very, very important and crucial, and you need to be very careful when you perform your valuation, which date you select. The second point is cost of equity. As we all know that cost of equity is, in a simple word, is a reward to the equity investors in your business. And equity investors are very cautious about putting their money. They want to understand what would be the return, particularly during this crisis situation. From our experience, now we understand that all the private equity or venture capital investors, their expectations on the return has increased a little bit. So when you perform the valuation, when you calculate the cost of equity, please carefully consider a few points, like the risk-free rate that you use in calculating the cost of equity, whether that risk-free rate is actually a default free rate or not. The country risk premium, it may happen that the country risk premium for Thailand has increased due to this COVID-19, and also the business and size risk. Business and specific risk or size risk, it's about, it depends on the which industry you are operating. If you are operating in a hospitality sector or a F&B sector, obviously the premium expected on the investment is much higher than if you're operating, if your business is in the telecommunications sector. So you need to be very careful while calculating the discount rate or cost of equity in order to perform your valuation. The third point is double counting on the risk. This is a very important point because we talked about uh, revising the projections, financial projections, and when you revise your financial projections standing at today, having the impact from the COVID-19 on your actual performance, you may be very conservative and you may consider the additional risk on the cash inflow, and your projections may be very conservative. At the same time, when you calculate your discount rate, you may also consider the additional risk, and you consider additional premium to calculate the cost of equity. So you need to be very careful when you allocate the risk in your cash flows, in your discount rate, and that should not be double counted. If you double count, then maybe you end up getting the lower value of your business, which may be not the ideal for your business. The next point is discount for lack of marketability. Nowadays, I heard one common topic. Everybody is talking that there are many distressed assets, and all the investors would like to invest now because they may get a good value. We need to be very careful that this statement may not be true for all the sector. The example that I had just given, that if a business is in hospitality industry like a hotels or food F&B business, which or the aviation sector, which are really impacted due to this COVID-19, you may expect to have some lack of marketability discount for these businesses. But just take an example of a telecommunication business. Telecommunications, actually the services increased during this crisis period, so their users has increased, their services has increased. So maybe the telecommunication sector not expecting any lack of marketability discount. So you need to assess very carefully when you perform any valuations, particularly for selling your business or raising fund through equity, that if any advisor or investors are arguing or arguing with you on this discount for lack of marketability, you should have proper understanding on the sectors and the services that you are providing. The last point is government support and incentives. As we know that many countries government providing a lot of support during this crisis period. For example, Thai government has extended the tax payment deadline. Thai government has given some subsidies to the SMEs, financial support, and those points should be considered when you prepare your free cash flow. Free cash flow is basically the cash inflow and cash outflow, the difference between cash inflow and cash outflow, and you please consider these government support and incentives to have a sustainable cash flow in your business, and to get, which can give you a good value for your business. So yes, these are the key points that we should keep in our mind when we assess our cash flow projections and our business valuation. Overall, what I can say is this COVID-19 actually taught us to go back to the basics, as cash is king, and taught us to evaluate our business on a periodical basis, that our fundamentals of business is always correct and at the right directions. So by saying so, I'm concluding my discussions here. If you have any particular point or questions on these presentations, I'd be very happy to answer. Thank you very much.
Thank you, Khun Prasen. So if anyone has any question, please feel free to unmute your mic, or if you can send the question to the chat box. So we got one question from Khun Nanda. Is there a standard format like P&L or balance sheet for business valuation?
I get this question. Thank you very much for asking this question. You know, there is definitely a standard format for P&L and balance sheet, which is given by the accounting standard or the committee. So any audited financial result from any public company you can refer. But I would say, you know, every company has a different nature, different cash flow nature, different services and product. So it is not really advisable that you follow a standard P&L format or balance sheet format for your business. Your business may not, the services, the product, the expenses, the nature of expenses that you have may not, suitable for those standard P&L or balance sheet. So you need to have your own format of P&L and balance sheet. For example, you know, the F&B business, the revenues are, for example, you know, the restaurant business, the revenues are basically from selling the food, right? The customer which visit the restaurant and they sell food. So per meal they charge the price for the food and they get the revenue. But this may not be applicable for a company which are into oil and gas. Oil and gas companies, their P&L would be very short because there may not be, you know, a lot of operating expenses and all, because for P&L all the expenses are capitalized at the end of certain period. So for a oil and gas company, maybe a cash flow statement is much more relevant. So yes, there is a standard for P&L and balance sheet, but my advice would be, you know, you try to talk to your auditor or consultant to build your own standard for the P&L and balance sheet.
Okay, thank you, Prasen. I appreciate the answer. Very clear.
Is there any more questions from the floor? Okay, if there is no question, I would like to ask one person to give us some final tips or advices or any closing remark before we finish the session.
Sure, thank you, Khun Fresh. I think the most important point is our advice would be every business should be assessed on a periodical basis, at least on a quarterly or 6-month basis, that the expenses, which are basically the cash outflows, and cash inflow, which are revenue, are properly generated. Your product and your services, your positioning in the markets are intact. You're keeping your position in the market. The expenses that you need on a daily basis, you have a sufficient cash reserves in the business. So these assessments are very important. And any SMEs or any businesses which are going for a fundraising and or M&A activities or looking for an alternate investment plan, you should know your value of the business. What is the exact value of your business? That is very important. So you may consider, you know, valuing your business at least annual basis, so you know where is your business standing and where you can take it from there. So I think these are the key points you need to keep in mind in order to, you know, cope up with during such crises like COVID-19.
Yes, thank you very much. So on behalf of the FTCC team, I would like to thank you and Mazars Thailand for your time and sharing with us this wonderful insight and presentation. And I hope all the participants gain all the benefits, and be careful because cash is king. And if you have further questions, please feel free to reach Mazars Thailand. I will give the contact in the thank you email as well as the presentation. Thank you,
very much.
everyone.
Thank you, everyone, for participating. Thank you very much.